All right, what's up, everybody? Hopefully, everybody's having a fantastic week. We got a little bit to talk about, not a whole lot. Bitcoin is testing the yearly opening range. It broke up into that area last week, but we never really got the full-on test. And then obviously Monday, which was the monthly and weekly open, had a nasty down day. I don't know if that was due to some news or if the market just wanted to trick everybody into getting them really bearish going into this week. This week was, the week after the holiday. So all week last week was a very thin market, very thin liquidity. So it kind of tricked everybody into getting really bearish early on in the week. And then here we are. As of Tuesday, we weren't really doing anything. We had a really good expansion up. Was long Pingu, for instance, and that trade ended up playing out. But as you can see, when we got above the daily exponential, we literally haven't gone anywhere. And then this morning, we're back under the yearly open. So yesterday, we closed back up on the year, which was good news for Bitcoin. The yearly opening range obviously sets the macro trend. If you're above the yellow line, you're up on the year. Under the yellow line, you're down on the year. Excuse me. So yeah, that's what you got, right? The blue line that you see on my screen is November's VWAP. It's the volume weighted average price. Typically, you want to see price get above this and start to float higher, indicating that the volume is bullish or that order flow is bullish. We are in a new month, so now I am expecting Bitcoin to potentially pull back. Obviously, we don't know how deep the pullback will be. But ultimately, as long as volatility keeps getting crushed or stays down, I think Bitcoin has a sideways to up slow move. So very sideways, very choppy. It's going to be a lot of range-bound trading moving forward. You're going to have two sides of trade. Some days you're going to make money on shorts. Some days you're going to make money on longs. But I think on any deep correction from here until the end of the year should ultimately be a buying opportunity as long as the VIX stays down to neutral. That is the key, absolute key. So let's go up here to the trading platform. The current positions that I have open are small. They're actually just leftover positions. I did put on a Litecoin short yesterday, last night, when right before the new day candle opened. I'm still in that short, and then obviously the Pingu trade that I made money on Tuesday we were long. This is a short position, so this was yesterday. Yesterday we did the members only live stream, so it looks like we shorted Pingu, and we took profits on that. We also had a long on Fartcoin that hit profit target and then immediately reversed. So we did make money on Pingu and on Fartcoin yesterday. As of right now, there are no new trades other than the short on ETH that you see. And here is the ETH chart. They're really, the range is super tight. So it's been going up. It doesn't need to pull back. Generally, in a real bullish market, you won't see very deep corrections. They will be shallow moves like this. There is no heavy news scheduled to be on the day, and the dollar is currently weak. So that ultimately could have more of a bullish outlook for today. So basically what you should be doing if you have a long bias on Bitcoin, especially, you should ultimately be watching right here. You do have a 4-hour support candle here. So the closing price on that candle could ultimately act as support. You also have the daily 21 exponential moving average, which is where we start to look for bullish outcomes. Now, obviously, yesterday was the first day on Bitcoin that you did close back above the daily 21 exponential. So today you're retesting that. In theory, if Bitcoin's going to remain bullish for the rest of the week, given Monday, what happened on Monday, then we would expect it to find support somewhere in this range sometime today. So like you could be setting the low of day right now on Bitcoin. You still have a good 20 minutes until the market or the New York session opens. They did sell it off in London. So Asia did really nothing, and then London came along and knocked it back down, and that's where we are right now. You won't have a new 4-hour open. We open the 4-hour candle at 7 a.m. Eastern Standard Time, and that candle will close at 11. So this candle will be the London or the New York session. So you could potentially drop down into the 30-minute, identify where support is on the 30-minute, which would be right about in this area. And then let's see if we get a close on this 30-minute candle or the one that opens with the New York session under this support. And then if that occurs, maybe we could buy that close. If that candle's going to be a trap, we would want to be buyers at the close with a stop under wherever that 30-minute low is. And that's about the only way you could trade today. If you have a bearish bias on Bitcoin, you're going to be looking to short the yearly opening range. Let me go ahead and pull up session volume profile, and then we'll go look at other markets. Session volume profile simply says that it's an inside day. You are trading inside yesterday's range. Yesterday's range was the breakout back above the yearly opening range. You did ultimately close yesterday above the yearly opening range, which is a good sign, good signal. And the fact that today is an inside day or trading inside yesterday's range is a good sign, good signal. Yesterday's low is all the way down here. That came from the very early onset of the daily range. So yeah, if I'm going to expect Bitcoin to be bullish and find support here, maybe one more close under and then it rock and roll. Or it could find support here. This is the thing about trading and looking for opportunities in the market. We never know where price is going to go. We never know what it's going to do. So we basically have to just react to what is currently happening. So if you are looking for opportunities every day, my advice would simply be you should drop your risk metric. You should cut it in half. Or if you're looking for multiple opportunities per day, drop that risk metric down to even maybe 1/3. So this way you get 2 stops. And if you do get it right on the 3rd attempt, you do get a chance to make your money. And that's about the only advice I can give you. Everything else is just chaos. And yeah, as of right now, the volumes do look like people are trying to short the year open because the point of control for yesterday, right under the year open. Point of control today, right under year open, or yeah, right under the year open. If we go look at the deltas, which this doesn't necessarily mean just because your deltas are negative right now, that will continue throughout the day. Obviously, at any point in time, bullish volume can show up and push it right back into bullish territory. But with this point of control and with this current volume delta, we would kind of think that prices are looking for a pullback, but the weekly range is bullish. Weekly volume is more bullish than bearish because you're floating well above the intra-week VWAP. So it does look like sellers are trying to hit the highs, but there's no concerned sellers as markets are still up near the high of the week. And that's what you have. That's all you got. Last week's high is delineated by this purple line right here. And once we get into that area, whether we get into that area or not, obviously, will dictate what I do with this November VWAP. I kind of just currently have it on right now just to kind of show you that, yes, we are bullish, or order flow seems to be bullish this week in Bitcoin's price action, but you are still very, very, very muted as far as the bounce that we have seen so far in the month of December. So we'll go on out to the monthly time frame and we'll fib that range, and you can see just how weak Bitcoin truly is. This is the breakdown candle. We were in a multi-month range here. So once we broke under this swing low, that was our signal to look for shorts because the market was potentially breaking down. We were going to look for that breakdown move. We got that move. So basically what we're going to do from now on is we're going to fib last month's range, and then we will watch as prices pull back into last month's range to line up any kind of potential shorts if you have a bearish bias and all that. My macro bias is still bullish on the markets because we're in a rate cutting regime. We do have the concerns of the BOJ and the JGBs, which is just Japan's bonds. They're going to cut or hike interest rates. That's not really good, as the Japan market, or Japan as a whole, owns most of the United States debt. So what we appear to be seeing right now in the bond market, since Japan owns the majority of our debt, they are repatriating, or running out of, if you will, they are selling US debt, running back to Japan's debt. And that could be concerning long term. That does have a headwind risk, if you will. So that's currently what we're seeing. We would love to see the bond market reject where it is, and it could still, whether you're looking at the 30-year, 20-year, 10-year, 5-year, 2-year, doesn't matter. They're all doing the same thing. The US is in a rate cutting environment. So if everything was normal and natural, these markets would be shorted. We would be looking for the macro to stay going in the same direction it has been, right, all year. And that direction is down, as the feds are cutting interest rates. They're cutting the rates. That means the rates are going lower. So when the rates spike, you take short trades, because you anticipate that in the future the Fed will stay on this road, if you will. So this ultimately should roll over. But because it's back up here into resistance, it does have market participants a little bit worried. And then, like I said, if we go look at the 30-year JGB real quick right here, you can see it is currently spiking. Now that's normal because they're hiking interest rates, but it isn't normal because it's up at 3.3%. Whereas the near-term rate on the yen right now is at 0.5. So it is a problem. And that carry trade is real, and that is where most of the US debt, i.e. leverage, lies. Your Nvidia, your Microsoft, your Apple, your Google, Tesla, all of that stuff has been propped up, literally, with that kind of risk. So if that starts to unwind, obviously that will have broader bearish implications for risk markets moving forward, and obviously Bitcoin would probably get hit pretty hard. We're not expecting that outcome. We do have positions ready for that outcome, right? We are positioning ourselves to potentially capitalize on this. If this were to occur, it would be a travesty. It would be very bad. It would not be good, but it would be very good for anybody who was short this asset or long the yen. You don't necessarily need to be short USD JPY. You could be short Aussie yen, or you could get long yen bonds. You could get long the yen currency. There are several ways to play this trade. So we'll see how it plays out long term. This isn't something that's going to take place this week, so you don't have to rush a short trade on this currency. You can allow it to pull back. You can allow it to go up into areas that we are looking at for potential resistance, mainly being last month's close or this month's open. That's a good place to potentially look for shorts, or at last month's high. Those are areas that you can, if it does pull back, right? If it does start to head back to the upside. Now, I would stop looking for shorts on this asset if the JP 30-year yield starts to roll back over. And I would also stop looking for shorts on that asset if our 30-year bonds, or even, those things start to roll back over. So essentially, as far as if like a stock is concerned, the TLT, we are looking for the TLT to hold support here. So basically, we want to be long the TLT, as that would be positioned correctly for continuation of the Fed cutting interest rates. But if the bond market says the Fed is wrong in cutting interest rates, then obviously this will dump, and then you will be positioned wrongly. But right now, the price that we're watching on the TLT is still 89.06. That's the trade we lined up Tuesday. It's still the trade. I think as long as you're trading Wait, that didn't 89.06, my bad. That's what we're trading at right now. It's 88.65. In my opinion, if the TLT is trading above 88.65, you can hold a long position on it. If you are trading under and putting in fresh lows, that literally means continuing lower, then you do not want to be holding long on the TLT, because it could be looking for a deeper correction down into the 87.56 spot, or even as low as 85.63. But I think ultimately this is where the line in the sand is as of right now. So as long as this price is intact, I think you could be long this asset. So that's what we currently have going on. That's really the only macro bearish thing that I can see right now. Everything else looks good. You're in a K-shaped economy, literally tech and, Nvidia and all the big trillion-dollar companies are kind of propping the markets right now. That is true. That's what a K-shaped economy is. It's top heavy. You've got leaders outperforming and laggards not performing. That's what a K-shaped economy is. So that's why it does feel kind of bearish here, but K-shaped economies can continue, right? And as long as you don't see a massive spike on inflation or a massive spike on unemployment, I think Bitcoin ultimately will find support. I think the lows, or at least the very near-term lows, are in for at least the near term. I think what you're going to see a lot of moving forward for the next several weeks is a lot of chop, back and forth chop. As price discovery, you're in December. It's the last month of the year. You're going to have people repositioning. You're going to have people putting on new positions. You're going to have people selling for tax reasons. There's a whole lot of new positions going to be put on here, starting to go into next year. You're getting ready to come to my literal favorite time of the whole year is always the beginning of the year. I love to get positioned for the beginning of the year at the beginning of the year. And that's essentially all I'm doing here with USD JPY. Ultimately, my Bitcoin bias is still bullish, but it's mostly, I know prices in discovery. So I want to be looking to buy dips. I already bought MicroStrategy. I bought it 2 weeks ago. I bought it again last week. I am getting long MicroStrategy. I am positioning myself for a Bitcoin bounce here, but I am keeping an eye on what other markets are doing. I definitely do not want to be offsides here in either scenario. If Bitcoin goes up, I want to be capitalizing on that move. If risk markets roll over and start to put in fresh weekly and monthly lows, then obviously I want to be holding positions for that potential outcome as well. I think there's a lot of opportunity in almost every market that is traded right now. There are tons of opportunities. You just got to know where to look, and that's what we're doing here. So let me go ahead and pull up the DXY real quick just to kind of show you what's going on here, as this is important. We did bounce off of the 21 exponential moving average back in or about midpoint of November, and then we traded back up to the August swing high. The August swing high is, and that is August of 2025, by the way, is resistance. Objectively speaking, we traded up into that swing high early in November. You can see right in here, this was at the very beginning of November. We liquidated that price. In other words, we traded above the August high. We rolled over, we came back in, tested the weekly 21 exponential moving average. That's where the buyers bought the dollar. And then you came right back up to the August high again, set in kind of a double top here, but this was another liquidation run, meaning you made a fresh high here. So it is a double top, meaning you have two swing highs up here, but this actually did the liquidation. So the fact that it did roll over here and broke under the daily 21 now has us with a more near-term bearish bias on the dollar. That would be good news, or I think it would be like a tailwind for Bitcoin. The dollar starts to head lower, maybe Bitcoin can see some strength come into play. So dollar breaking down here, there is a few points of contention that could be support. You have a trend line going way back when, all the way back to 2011, basically holding up the market here. The blue trend line is the line chart. So if you're looking at a line chart, you're not paying attention to wicks, right? You're just looking at swing lows on the line chart. That's where the blue trend line comes from on the weekly time frame. And then the purple line comes from the wick lows from candlestick charts. Basically, you're currently breaking down from the line chart trend line. Doesn't really matter because you did all this, but it's there. I just have it there to basically show you that you haven't really done anything. You're still trading in a multi-month range here. I mean, the dollar has been trading here for a long time, literally. So a breakout failed. We'll see what it does. If it does get down in here, maybe a breakout is coming. And if that were to happen, obviously I think that could help Bitcoin more than it can hurt it, right? But we'll see what happens. You're testing the midpoint of October's range. That could be an area of support. If you lose 98.70-ish, then I would look for a test back down to 97.81. That's on the dollar. You have a fresh daily low here, so you literally have made a fresh weekly low right now. This is what the weekly chart looks like. You have an expansion occurring right now. Current breakdown looks good. Next weekly support, 98.53. There are a few levels of support that could come in, but the major level is going to be down here at the October open. If we lose that area, then I feel really good about a September low retest. We'll see if that happens or not. But right now, I'm going to get stopped out of the euro dollar short. I'm going to just allow that to happen because I have on USD Swissy shorts. This trade is playing out good. So if the euros dollar short gets stopped out, I'm more than okay with that. And that would be the correct position to hold. So these two trades are basically offsetting one another. And then this trade will make money if the yen firms up. So if the yen firms up and starts heading higher, then I definitely want to be short the dollar and I want to be long the yen. And then there is something that I think people need to pay attention to over here that is happening currently on the Tasty Trade platform. I don't know if this is going to be something that is taking place across all trading platforms, but notice, that's MicroStrategy here. Notice the yen has bounced. It is making this move up. You are seeing for the last few days a little bit of spike in volume, but it's not massive like this right here. So we don't know if we're going to see upside continuation, right? Because the volume is just kind of nothing, right? It's just like a nothing burger. But obviously you saw the volume spike on MicroStrategy, right? Huge volume spike on MicroStrategy. So I am expecting MicroStrategy to bounce. I started buying it last week before that. I've got an options trade on where if we get up into the 225 area, I will be able to peel that trade off with nice profits. And I'm not closing that. This volume spike looks really good. We'll see if it can continue. I'm assuming it will. That's huge volumes. That's looking good. So yeah, that's what we currently have. If MicroStrategy is looking for the bounce, then obviously I would expect Bitcoin to find the bounce as well. With dollar weakness, that could help. I don't know if we'll be able to get the position off today or not, but we'll try. We absolutely will try. That's what we're here live for with the public, so we can try to make money, and we're going to continue to do that. So ignore the Pingu position simply because that trade has I've already taken the money on that trade, so I'm just leaving it open to see what happens with it. Here's what the chart looks like. Massive move on Monday. This thing was up 30% end of day Monday. An absolute phenomenal rally, and you have not seen the sellers or the fearful sellers show back up. If we go look at the internet here, we'll pull up the long-term hodler supply, which is kind of good. Obviously, when it's spiking to the downside, then we don't want to get really, really bullish. But we do have a low here on Bitcoin price, and long-term holder supply has bottomed. Will it roll over and continue lower? We don't know. We don't care, right? That doesn't really matter. But it is bouncing, or at least holding steady here, right? That's a good sign. That means you're not seeing that fearful selling any longer, which is a good sign. We don't want to see fearful selling. Fearful selling will crash the market. So it's good that that has slowed down a lot. On the stock market, you're looking at a 31 fear today, 26 fear on the crypto market. So it's good that we've gotten out of the massive, real bad fear. That's good. Now, and lastly, let me get you back up here to the VIX real quick, as that's kind of what I wanted to show you earlier. So you can see how the VIX has fallen off dramatically. We retested the yearly opening range yesterday. That's where it rolled over. So that's where we were looking for it to roll over. That is where it did roll over. And you are putting in a fresh low now. You're trading down near yesterday's low. That's a good sign. What I would really love to see is, I would love to see the VIX fill this gap today. This is a gap that has not been filled yet on the VIX. I think that, if we could get down in here and start pushing, then we can have more of a more neutral to up bias on Bitcoin, as long as this is heading lower. Now, I did put out some data early on in Tuesday that said we could see a spike based on the put to call ratio on both the VIX and the S&P 500 last Friday, but we're not really seeing price action show us the same thing as that put to call ratio did. So it could have literally been positions closing, not necessarily new positions being opened. Or if it is, they're just simply hedging, right? They're just hedging off any unfounded risk that they don't want. And the VIX, like if you look at the volatility for the VIX as well, you can see that that has also dried up, which is good. That's what we want to see. So we're back down to neutral levels. That's good. S&P's up. That's good. If you look at the equal weighted S&P being the RSP, this basically puts an equal weighting across all sectors. This will be a more reliable way to look at, is it just the tech sector rallying? No, it isn't. It's everything is rallying. Everything. So your equal weighted also moved up. Now, we didn't see that same kind of forceful move back up last week on our ratios. It's just a bunch of different assets that we pay attention to that kind of gives us a feel of capital rotations. It's, we did get a little bit of a move higher this week on energy versus XLP, which is defensive staples. Here on growth versus value, you're still kind of just sideways. So not really seeing that growth spike happen just yet. People are still a little bit defensively positioned here. And then tech versus energy, you're seeing the same thing, right? So it does look like we may see a little bit of a pullback on the tech sector. Ultimately, if that happens, you will see the S&P 500 roll over a little bit. If we go look at the S&P 500, it looks okay. We're watching to see what it does at November's high. That's where we're interested. Right here is November's open and November's high. Right now, we have to have a bullish bias based on the simple fact that we got back above everything that mattered, or everything that was telling us to be bearishly positioned. Right here is your current new month open. You can see everything looks okay. You're trending up on the week. That's good. I don't have a super bearish bias here, but if we liquidate November's high and then fail, then I probably will put on a little bit of insurance for any downside or any volatility spike. But right now, everything looks okay. If you look at the weekly and how it closed last week, it was phenomenal. It was an absolute rip your face off rally. I kind of didn't buy it. Like, I didn't believe it because it happened under thin market conditions. And I've seen in the past, whenever you get a massive rally or a massive drop in thin market conditions, when the holiday is over and you get back to normal trading, sometimes you have a pullback. Well, we didn't see a pullback. So obviously people believe that rally, because here you are making a fresh weekly high. So you've literally stopped out anybody that got short end of day Friday. End of day Friday, they're gone. They're out. We'll see if they're, all we can do here is wait. I don't see anything to be super bearish on just yet. Not just yet. We need to give it a little bit more time. And then on the futures or the CFD product, give me 1 second. I need to take this. Sorry about that. I had to take that call. All right. Anyway, back over here to the S&P 500 on the CFD product. This product just, it tracks the futures. I don't have real-time data on this platform, so I look at the SPX 500. I do have real-time futures data on Tasty and Charles Schwab and other brokerages. I just don't see no reason to pay TradingView for real-time futures data when I already have that data. So yeah, kind of a useless payment there. But anyways, there is that level that we're watching right here. That's November's swing high. So that's going to be important for me, basically just to kind of see, is there actual demand in the market? Are we seeing fresh demand come in up above November's high? If we do see that fresh demand coming in up at those prices, then there really is no concern. All right, there's no concern. But if we just get up there, liquidate that price, and then have like a nasty bearish rejection, then you might want to throw on a little bit of like maybe a put trade or something, just to position yourself for a potential drop, right? But everything else is okay. Like no matter what you look at to give you technical signals for any market, everything is okay. You're above the 50 on RSI on the daily. You're well back above the daily 21 exponential. And if you look at current prices or current structure for this week, you can see that the 21 is actually hovering well under the candles. So technically speaking, I wouldn't like be bearish AF if we liquidate that low or that high and then roll over, simply because as long as the 21 is holding as support, then I want to have a bullish bias. So if we see something like this and then it pulls back, obviously I'll put that trade on up there, but I will be looking to close that trade here, right? When we come back in to retest that 21, I would take profits, and then maybe leave 1 or 2 puts on just in case you get a nasty drop through that level. But if the demand is legit, then you should see support come in at the 21. Wherever that ends up being. But as of right now, you could pull back today even down into here, and that ultimately on the first attempt would probably be a buying opportunity, because there's nothing really on the macro that suggests we're going to see a bear market. And I've been firm on that statement. Obviously it's a subjective statement, so I mean you can have a bearish bias. I just don't. You know what I mean? That's all it is. It's just I don't have a bearish bias. Obviously, Bitcoin is telling us that something is off. Clearly. Because this thing is down. I mean, the 30% mark is right here. So when Bitcoin's under this, it's a bear market. For me, subjectively, it's a bear market under 30% because Bitcoin is a lot more volatile than the risk market. So if it's 20% that justifies a bear market on risk, for me, for Bitcoin, it would be 30%. And you're above that. You're above that nicely up here. So even though you've seen a massive bounce on the S&P, a recovery, if you will, it gave back all the losses. Bitcoin has not. So there is still that fear out there. There still is that lack of demand, or the money that was liquidated basically on the Black Swan event hasn't came back, essentially. You do have new buyers coming in, and I'm sure Michael Saylor is buying, and other people are buying. ETFs are buying. Smart money is buying. Anytime you have a massive correction like this, you should be buying as well, because they all are, right? So we'll see. But as of right now, you're trading above bearish momentum on the RSI. So if Bitcoin was super bearish, we would not expect it to have upside continuation above the 382 of last month's retracement. When something is really bearish, sometimes you don't even get back to the 236. Like, that bearish pressure comes right back. It doesn't wait for a deep retracement always. Even in 2022, when you had that bear market, it was mostly sideways and choppy, and then it retested the year open range and rolled over. So you could still wait on something like that even. I think there's time. Anyway, we're already trading above the 236, so at least it's strong enough to do that. You're even trading right now at the 382 of last month's range. The midpoint would be an area of resistance. That's why we have it marked out here. That's why we're really interested to see what happens at January or June's low, because it's right there with the 50% retracement, and it's also right there on that last downside continuation candle that we had. So this candle closed at the midpoint. So it can be looked at as more weak than strong. If it would have closed as a bullish doji, then that would look like a lot of buying pressure, like a capitulation style bounce. We haven't seen a capitulation style bounce yet. And we only seen one day, which was Monday, where you had an aggressive buy candle or a rapid repricing. And then that rapid repricing stopped. So you had like one brief period where you seen rapid repricing, and then basically it's done nothing since. So that's more bullish than bearish for me. So we'll see what happens though. There are plenty of levels to look at for resistance if you want to be bearish, to look for shorts. I think, you could get a little bit higher, but theoretically speaking, this is the yearly opening range. So if the bears are going to come back and they are going to hammer Bitcoin, they could do it right here. They don't need it to go higher to short it. They just have to ask themselves, do they think Bitcoin's going back down or not? As that will really dictate what future price does. And the fact that they aren't hammering it. They did hammer it, but it then got bought right back up so dramatically like that. It feels almost like this was a trap. Even if there was news that spurred that on, it didn't last all day, right? You got like one real good downside thrust. Then you spent multiple hours going sideways to the New York session. And then you literally had like 1 or 2 hours of downside. Right here, 10 a.m. There was your downside break. There was your close. Your 11 a.m. candle stopped. You seen no more downside. It literally just like they turned it off. Shut the spigot off. And then those buyers came in with a fierceness. So yeah, we'll see what happens here. But with this structure, I don't necessarily want to be a buyer at the top of the weekly range, especially on Thursday. It's late week. So I think the majority of your weekly range is in. You have your low, you have what could be the high. So right now we're just going to be looking for opportunities to trade the ranges. Unfortunately, all morning and all day yesterday, those ranges are very narrow. So maybe instead of looking to trade Bitcoin on super tight ranges like this, maybe you would find more opportunity in something like Fartcoin or Pingu, as Fartcoin is giving us plenty of momentum, plenty of movement. Today alone, from the open to the high is, well, look, thank you for that. You kind of blocked out my indicator. 15% yesterday alone, or sorry, today alone. You've already moved 15%. So Fartcoin's moving. It's moving, it's cruising, it's doing real good. So you could look for opportunities in something like this. Right now, for Fartcoin, for me, there is no trade. As long as you're below this wick and above this wick, you're mid-range. So there is no trade. But if Fartcoin liquidates this swing low and then stops going down, maybe you can get long. Maybe you don't want to. I don't know. Everybody's going to have a different bias, right? We are seeing the risk markets roll over a little bit here on the open. Bitcoin is a down day. Ethereum is a down day. And dominance is mid. It's just mid. It's not doing anything. It's 0%. So you're just a doji for right now. So if you have a weak dominance, I would feel more bullish, like alts. If you have a strong dominance, then I would have, more of a bearish bias on alts if Bitcoin is making fresh day lows. So I'll leave the Litecoin short open just simply to catch any potential downside, but I will also be looking to buy potentially Fartcoin, but we'll see what it does here. So let me get Fartcoin pulled back up. I don't have these situated. Oh, it's here. Sorry. Yeah. I just wanted to look at dominance real quick. I know I'm scrolling over it multiple times. Yeah, everything looks red. I mean, you have a lot more red on the watch list than you do green. So that's a little bit concerning, but nothing is super red. Like, you're not seeing things down 10, 12, 15%. That's kind of good. So it's kind of a lackluster day, unfortunately. Good morning. How's everybody doing? Hopefully everybody's doing good. Pants check. Of course, there is no pants. Not here. We don't wear them. What's up, Oxum? Good morning, TDT. The trade desk pulled back into November low. Time to attempt a long here. No, I wanted to see if it held that area. If it's breaking down, we don't want to buy it. The support level that we were watching is currently, you're in it. You know what I mean? So like, yeah, as long as you're not trading under this. So today could be a buying opportunity. Obviously the close will be important. Give it a second. I don't understand what's going on. Internet was good. I did a check right before I came live. Okay, so there's the line. That's our line in the sand. You're under it. So I don't love that. Right? You closed back under it yesterday, which would have been the signal to be cautious if you're holding longs. That actually would have been the signal to tell you to get out. Right? Because if you bounced and now you're back under, that's usually not a good sign. Could it be a trap? Could it be looking for one final liquidation before it does bounce? Maybe. But the signal wouldn't be to long right here. The signal would be wait to see, does the day close back up above 39? You need to see bullish momentum come back. You had momentum for a few days here. So it should have rallied, right? It should have continued to rally. It should not have sold off. See what it does. If it liquidates 38.23 and then closes back above 39, put the long back on. But if you're continuing lower under 38.23, then we no longer like it. We don't want it. It could go much lower, right? You've already did the liquidation. So you can see there's a ginormous range here of untraded prices. So if you lose this area, the next feasible area to look for support would be 26.35. I mean, you could look even higher if you want to look under every single monthly low before there, but that would be like the most feasible price. Could it roll or like find support mid-range? Obviously it could. It's already doing what I don't like. I don't like the fact that it's falling back down. Now, Pepsi did this and so did UPS. So both those trades were similar to this one. Really weak stocks for the year 2025. But, you know, at a significant area where support had been building, both of them ultimately rolled over and put in that final liquidation before spiking. So if that is going to occur, at least you know what to wait for and watch for. So today, you would probably see on an intraday basis a spike down under 38.23. What happens after that? Do you see continuation lower, or ultimately does it immediately bounce and then get bullish momentum enough to close the day back above $39? I think you're so close here with the prices, 38, 23, and 39. You don't need to try to catch the exact bottom. And as long as you're trading under $39, you don't know where that bottom is going to be. You don't know if it is going to be a bottom. You know what I mean? Yeah, so, I mean, that seems like it's the obvious downside target, but will those fresh shorts take that position off down there? Are they targeting this price or are they targeting much lower? I still like it long term because if you look at the analyst rating on this stock, which is right here, you're going to see that it's a huge buy based on 41 analysts. 41 analysts. You've got 21 calling it a super strong buy. That's almost half right there. All on the strong buy. Then you got 4 say it's a buy. You've got 11 that say it's a buy and hold. You've got 1 that says it's a sell, and then 4 that say it's a strong sell. So clearly the median of analysts would be it's a buy. It's a buy, right? It's more buy than sell. Are these analysts always right? Obviously no, but still it's heavily skewed as a buying opportunity according to those analysts. So it's a buying opportunity. You just got to know, where is your cutoff point? Where do you say enough is enough? So Bitcoin's currently putting in that 30-minute push lower. This is what we wanted to see. We got 9 minutes left on this candle. So to be honest with you, you have closed under what would be intraday support already. There's a clear support that was built in yesterday, right in here. And that's where 4-hour support is. So we'll see what it does here. We'll see what it does here. I would like to see a close under it, but then that next candle, I don't want to see it even look for fresh lows. I would much rather see it start to bounce and then ultimately within 30 minutes be able to completely retrace this entire 30-minute candle. If that happens, then I would feel real good about holding along here for the day trade. But even if we were to buy it, what would our potential target be? Well, it's going to have to be today's high, but just under it. Then that's barely going to give you a 2% move. Yeah, it's kind of one of those days where the short trade was obviously at the top of the daily range. Litecoin was a very, very easy short, right? Very simple. You opened a fresh day and then you never looked up. You just took out this low immediately. So it would have been a very easy trade to short at the open, which is kind of what I did, right? I think I got my short in or short off a little bit before that. because yeah, my short is just a little bit more aggressive than that, but it's a small position. So I would need to see a pretty severe decline in order to make my $300 daily goal on this trade. So, but yesterday I was just basically watching price action here, and it didn't look super aggressive to me, so I decided to go ahead and take that short. Stop was high of day. It was a very simple trade to take. Very simple. Had I positioned correctly on that trade, then I very seldom ever trade Litecoin. Most of my trades are going to come from Bitcoin, Ethereum, Fartcoin, Pingu, or Bonk, because those just move more and they track regular markets pretty much about the same. So they pretty much do about the same. Oh, there's your open here. There's your 1900 hours. So that's your open on Fartcoin. It did the exact opposite that Litecoin did. On Fartcoin, you had a big bullish rally that happened at the open, whereas Litecoin did not. Litecoin rolled over. So there was just more weakness in Litecoin yesterday. Could this be a stop run and then it's going to head lower? Yeah, it could be. Your short entry would have to be right there at the New York session, because that's where you're trading. So you would have been looking for shorts roughly right about this white line if you were looking to take a short. And then clearly that happened before the New York session. So, I mean, I don't love the setup for the short. This is starting to look a little bit more aggressive than what I would want to see, but it's okay because of how bullish it can get, right? This is not a crash by any stretch of the imagination. Yesterday's low and yesterday's open, I would want to see hold price, though, for sure. I definitely would not want to see Bitcoin pushing under yesterday's lows. That would be pretty bad. Don't try to buy this free fall. You got 5 minutes left on this close, so give it 5 minutes. Not seeing a whole lot of volume build up here, but it doesn't really matter. Cumulative volume delta was structured more bearish than bullish as you're under the neutral line. You got one more. This candle's close will be the 30-minute close. I would rather it close like down in here, because then when the next 5-minute candle opens, we'll know right away if it's looking to push deeper or not. These lows are right here, so that's kind of concerning. I'd rather it go ahead and do that right now. If it is going to be a trap, just go ahead and get it. Or else the next candle's going to open and do it. And that doesn't really smell like a trap. But we'll see what happens. Not really seeing huge buildup of volume down here. That's not great. And I haven't looked at the liquidation map in a bit. It's probably chilled out a whole lot. It has chilled out a lot. So now it's more neutral. You have a more neutral footing, with more of the liquidity being to the downside, of course, because you had such a massive rally on Monday and Tuesday, or Tuesday mostly. So it makes sense that the majority of liquidity would be right under us. And then if you like viewing it on the heat map, then I would assume there's going to be a lot of white hot stuff down there. And there is. Yeah, I mean, yeah. It looks about normal. Looks about the way it should. So get down there. Let me go ahead and pull Bitcoin up. Yes, go, 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 go. I wish it would do it. It doesn't look like it's going to, but that's okay. What we're going to do is we're just going to let this close. When it hits 0, 0, 0, you're going to send the order with a tight stop. If you're trying to buy the weekly high, right? But when it gets this low like this and then backs off, it kind of gives me the feeling like you're going to probably see the next candle open, run down there, and then what? What does it do then? So it's kind of one of those, doesn't really look like a trap scenarios. It's not a perfect trap. But we'll take a small risk on it anyway, because that's all you can do. If you're not holding the short, you have to buy. If you're trying to trade today, if you're not trying to trade today would be a good day to sit on your hands. There really isn't no major news or data being released today. There's going to be a ton of data being released tomorrow. There's 36 seconds, so I'm going to go ahead and get the order ready. It is kind of going, it's going to be a lot more risky to buy the close with these lows right there, because it feels like it's going to want to do that, right? It's going to want to go down there and smoke those lows. I'm going to go ahead and send the limit now to buy the close. I'm long and filled. So basically, if this was going to be a trap, in theory, what we would want to see is this candle open and then slowly start to make its way back to the upside and then take this candle's high out. If it's not a trap, you're going to open, see a small pullback, and then a drop, which appears to be what we're seeing here. Very little stuff starting to happen down here now, but that's okay. If it's a trap, it's going to rally. Because these dips is usually what, when the traps get set, you usually get these kind of aggressive sells. But if it's not a trap, then you're going to get stopped out, because this will ultimately find a high and then roll back over and come down here, smoke these lows and smoke these lows. So you'll eat the stop, right? That's all you can do. Just make sure it's not a whole lot of money. That way you live to fight another day. If it is a trap, then it should rally back up on into here, and then we can look to take profits as it breaks out. Or if it gets back up near the day high, we can take that trade, close it, move our stop to break even, and then see what happens. But tomorrow, since we've gotten the fill, let's go ahead and take a look at the calendar. You can see tomorrow you have core PCE price index. This is the Fed's preferred inflation data gauge. So they're going to be keeping their eye on this. You also have a Michigan consumer sentiment report. These can, if you get under 50, can cause sell side pressure. You also have personal income and personal spending. All of these data points can and has in the past shown to be kind of volatile for Bitcoin. So you're going to get 4 kind of volatile data points tomorrow, and they're all coming at 10, which is literally what we just right now. Okay, so 15 minutes going to look the same as the 30 minute, as it's a pretty, this expansion started here. So we can look at the 15 minute and say, we know that we want to see this at least get back up to here in 15 minutes. But it doesn't have to. But it would be a lot, it would feel a lot better if you got that. You are testing the daily 21 exponential here. So in theory, if people want to buy Bitcoin and they want to buy a daily 21 retest, right now is that opportunity. So that's what it looks like on the daily range. We're not really seeing that demand show up yet. That's actually a little bit lower, isn't it? If we use yesterday's close, that's yesterday's close. So right in here is a better line, I think. Seeing a little bit of demand under here, but not a lot. Not really seeing big volume spikes up on Delta either. But price is at least staying off the open, which is good. Good morning, fam. What's up? Let's have a bullish rest of the week. It's been pretty bullish all week. I mean, you're at the week highs. What's up, Grow Geek? Good morning, Tom. So the bond market and yields say indices make all-time highs then dump. Not necessarily. The bond market says that they don't believe the Fed. But it could just be a liquidation run. We don't know. It's not so much what's happening right now, it's what happens in the future. Because the bond market could still roll over in theory and head lower. That's what we want it to see it do. Not the bond market. The bond market is inverse to the yields. We want the yields to roll over and start trending lower. Because that's what the Fed's, that's what cutting rates does. It makes the Fed fund rate go down. So in theory, if the Fed fund rate is trending lower, then you want to be long the near-term bond because you're looking to position yourself for what the Fed is doing, what the Fed is telling you to do. And right now the Fed is that's their way of propping the market up, right? That's literally how the markets have been traded since 2008, since TARP became a thing. That's what the bond market tells us. It tells us whether or not market participants are doing what the Fed says they should be doing. So when you have a discrepancy, when the Fed is in a rate cutting environment and yields are spiking, that's essentially market participants telling the Fed, we think you're wrong. That's how that works. You don't have to take my word for it. You can simply look at the bond market itself. Look at the 2-year yield. Look at it on a daily or a weekly time frame, and then compare the Fed fund rate. Right? And then just scroll out so you can see all the data. You can see how the blue line pretty much corresponds with, obviously there's some more near-term volatility that isn't in the blue line. So that's all normal, right? So like here, for instance, you had a much deeper spike on the 2-year yield and then an aggressive spike higher. This is normal volatility inside of the Fed's measurement. Like they're fine with this much volatility. So if you come over to where we are now, the Fed started cutting the last few months, or the last few meetings we've had, they've been cutting. The yield isn't really, it did for a little bit, but then it kind of chilled out here. So we could see a spike up to here or a drop down to here, and that would be normal volatility. That is okay. That is okay, but it makes it difficult if you're trying to position for that move, in a sense, right? So the 2-year yields are looking okay, as they have already pulled back off of range highs. So if you're looking at last month, right? 1, 2, 3 months, you can see how this high is up here, and the current contract, or the, why won't you click? Price is currently well under that. The difference is when we look at the long-term yield, the 30-year, price is actually at the top of that range. So you could spike above, but do we continue even as the Fed hikes, if that, or cuts? Because if it does, then that could be something else is different. And the reason this could be spiking right now is because of JGB, the 30-year JGB spiking. That's currently what we're looking at here. If this rolls over, then we'll continue to be bullish. But while it's trading above the October high, we have to be very cautious. We're not full on bearish, because we understand that near-term volatility could take it well above the highs, right? But if it starts to trend higher, that's when you have to be a little bit cautious, because now the market's telling you, well, it's full on trending higher when it should be trending lower. So that's all we're watching for here. Nothing major yet. We're not super concerned here, but I'm just letting you know that there are starting to be some things out there that could indicate that everything ain't as rosy as most of your, long side analysts are saying, or your long only investors. Because you have a lot of billionaires that are out of the market right now, and that's got people concerned. Wait, what? Okay. The markets are very, very top heavy. They're overbought. It is what it is. But they're not situated, like the macro isn't really situated for a bear market. You have a K-shaped economy. That just means it's top heavy. Because remember, the top 4 companies that are $1 trillion companies, they are making money. They're not going in, like the .com bust. When that happened, every company that had these insane evaluations, they were not actually making money. They weren't actually making money. Instead, they were leveraging themselves to the gills. And then when the bottom fell out, the bottom really fell out of it, because there wasn't any real money there. With this bubble, if you will, you actually have $1 trillion companies that are earning, $50-60 billion a quarter. So they're using their own cash coffers to do this AI investment. They're not over leveraging themselves. That's why the markets haven't just totally dumped, because the massive spending that is taking place right now in the AI is justified because they are actually making money. AI isn't making money, but the people investing in AI, putting the infrastructure there, they're investing for the run that's going to come, if you will. They're not going into debt to put that trade on. It's their money. So it's not bubble. It's growth. It's huge growth. It's not super bearish. There are cracks, obviously. This Japan thing could be big, but it isn't going to happen anytime soon because the whole Japan government they have to vote on whether or not that if they're even going to allow that massive stimulus package to go through or not. That's also going to spur investment. That's going to cause either sell side in the US bonds a flight back to the JGB or vice versa. They start selling the JGB and run back to US debt. That's what we hope happens, that the markets stay good and everybody makes money and Bitcoin slowly migrates back to the 120s, 130s. We don't know that's what's going to happen, but I'm just saying, like, right now ain't the time to be getting super heavy levered into bearish bets. You definitely should have downside risk on Bitcoin already covered or be putting it on, right? Just make sure you're doing it with a strategic amount of money. Don't try to look at it as a wealth transfer. Not just yet. That wealth transfer trade ain't here yet. It could end up showing up, but it's not here yet. If the markets crash, if the yen spikes, Bitcoin rolls over, there will be a wealth transfer. And whoever is short the USDJPY will make a lot of money. Absolutely. You will transfer a lot of wealth to yourself. But I think there's time. And you don't need to do it. You don't need to leverage yourself to the hilt or go sell your house and bet the farm on it. Because if that move happens, that move is going to be so big and so violent, you're going to get paid. Right? But what we hope happens is it doesn't happen. Because it's never fun to read about how people lose everything because they didn't believe you or whatever. You know what I mean? It's like, it always sucks knowing that you made a lot of money and meanwhile everybody else lost a lot of money. Because your normal mom and pop, they're not short in the USDJPY right now. Like, normal investors are just long only. Their 401ks, their retirement is long only. Safe assets. We don't want to see safe assets collapse. That's never fun. So this is starting to look a little bit better, right? At least we took out that previous 15-minute high, so that's a good sign. It's not a guarantee we're not out of the woods because you could get a volatility spike. The VIX is trading at yesterday's open, so at least the VIX ain't taking out yesterday's high, right? So far, everything looks okay. Here's the VIX. You're kind of trading around yesterday's open. This data is lagged by 5 minutes, so it could be plus or minus 10 cents, but you're right around yesterday's open. That's fine. Where our long will start to be a little bit more concerning is if you're trading up in here, back above that yellow line. That's dangerous. Then you could literally see this thing puke. Ugh. Right? And this is another reason why I don't really love trading Bitcoin that often when it's sideways like this with small ranges, because I have a decent sized position open and I'm only making $100. I literally needed to get up to here in order to make my daily. So I would need kind of a large move to take place. That's why I love trading Fartcoin and Pingu and those things, because you don't need such a big move. You can get in and get out with your money. It just seems better. But it does feel good that it is happening right when we said it would. or right when we tried to take the trade. The 30 minutes still doesn't look great. I want to see this thing get above that high. That's when I start to feel a little bit better about it. There's a huge resistance up here. This is the yearly opening range. This level dictates macro trend. It does. You can say that's a big statement and you can say a lot of things, but it's an objective, factual statement. People will make decisions based on this level. If it's positive, then I want to own it. If it's negative, then I want to sell it. That's literally what this line does for Bitcoin. It makes people make decisions. So I would love to see Bitcoin get back above this and show us a little bit of bullish momentum. But as long as Bitcoin is trending under this, then we have to be a little bit more concerned that the bottom might fall out. So it would be a more strategic place to be potentially short. You get what I'm saying, right? That just wasn't the trade that was given to us this morning. I mean, it was. You could have shorted it yesterday evening or shorted it at the London Session Open. The London Session Open gave you a fantastic short opportunity. It was a bounce and it gave you a lower high. So clearly these people here think Bitcoin's going to roll over. If I thought Bitcoin was going to roll over, then I would want to see this point of control up here. The fact that it's down here, maybe this little dip is just to make everybody run for the hills. Clearly people are taking the short right now, aiming for this low. Because that's where yesterday's liquidity is. Now, anybody that bought this wick yesterday, their stops are sitting right there. So that would be a good downside target. But the close yesterday is what gives me my bias today. Yesterday's closed back above the 21. That's huge in a bear market. The fact that you can do that, that's kind of big. The fact that you closed above the year open is good. So any pullback into yesterday's range today should in theory be a buying opportunity, right? Right. The only way I would have sold up here, if I was awake, I might have taken that trade if I thought this was a trap. If I felt as if though this expansion was nothing more than a bullish trap. It didn't feel like that to me because of what happened the day before. The day before, this was that aggressive, capitulation style buy the dip moment that we've been waiting on. This is an aggressive rally. And you can see how retail was trying to short it. Everybody's always trying to sell swing highs. They're trying to sell swing highs. Well, I want to be on the opposite side of that trade. Because if price breaks out, those people are going to get stopped out. That's going to spur in more demand. We just don't know if that will happen or not. But we can position for that based on how we closed yesterday above the 21 and how today you pulled back slowly, right? The biggest sell-off that you saw today in today's range was right here. That's the most aggressive. Like, these guys have been trying to get Bitcoin to break down literally all freaking day, and it just hasn't been. You know what I mean? Like, you're still trading inside. If this was a bearish, like a bearish day, then I would have expected them to hammer it here. I would have expected yesterday to give most of this stuff back. It didn't. Instead, you saw gains, more gains. So to me, it feels like the bulls are in control of the market right now. So that's how we want to position. But you can definitely hedge while you're up at these prices. I think price would probably, this right here, like this is as high as you should go if Bitcoin's going to roll over and be a bear market for 2026. 100K, that's a big figure number. That's a huge number. That would be a good area to look for a retest. And if you look at this thing like on a monthly chart, 100K is going to give you a retest a little bit higher than the midpoint, right? I think the 50 weekly or the 21 weeklies up in here, right there, like bounce off of that. If we fail there, then I will be more than okay with taking a short. More than okay with that. But it could literally roll over from here. It absolutely could. If there's more supply here than demand, it will. And unfortunately, you will only know what happens with today. If this thing rolls back over and starts to break down, then you'll be able to say, well, it does look like they're taking profits on that rally. But if we see more demand come in here, then they're good. We're good. And at least we did take out that 30-minute high. So it does look okay. We're not out of the woods, but it looks better than it did 30 minutes ago. Litecoin's still struggling for some reason. So basically, if I close the Pingu long or short and the Litecoin short, that'll put me at $250 on the day. Since I made my money yesterday, if I did that today, that would put me really there, almost there. If I close the ETH short and then the Pingu short and leave this one open, it won't get me there. So I can leave the ETH short open just in case Bitcoin does roll back over. And I can close this one, and that would give me $250 on the day. So I'd be $50 short of my $300 gain. Max risk $100, gain $300. Not quite there, but we got to take what we get, right? So we'll do that, and then we'll close this one. And we'll go ahead and realize those gains. And then if Bitcoin rallies, the ETH position will get stopped out. We need to set a stop loss on Ethereum. Very small, $10. So nothing burger. And we'll set a stop loss on Bitcoin. That's a little too big. We'll set this one at $30. So we'll still be in profit on the day no matter what happens. And then now all we got to do is just let price do its thing. That's all we got to do. Game, set, match. Ethereum looks like this. It's retesting November's VWAP, but there's probably an objective level here that would be a better level to look at than that. There is. You got this week's high there. So this is actually where I would expect Bitcoin to liquidate before rolling over if it's going to remain bearish. Because this is the range that price has set as the trading range for the last 3 weeks. So if price is going to remain choppy for the rest of this week and going into next week, then I would expect a short here and a take profit at least here. Right? And that's the range that the market has already given us. So we're not trying to predict anything. We're just trading the ranges the market gives us. We're doing kind of something similar on Bitcoin. Looking for the long at the high of the range, not the best trade. right? You're at the top of the range. So getting long here isn't the best trade. There's that. It is a bullish outside week candle as of right now. I mean, obviously, it just has to get to here to close that, or to close as a bearish outside weekly candle. So, I mean, it looks okay for upside continuation. Will we get it or not? That's the question that nobody has the answer to. But our range is identified. So, like, I know this chart is dirty and it's hard to see. So let me just go over here and show you it this way. So basically, this is the range that price has set as the trading range for the last 3 weeks. So you want to be looking to put shorts on at the top of the range. You want to be looking to buy near the bottom of the range. Now, in this scenario right here would be pretty close to the bottom of the range, or at least if you're short here, where you would be taking profits, because that weekly close could act as support. So you can hedge your trades off in a way that you're like putting the ball in your court. Instead of gambling everything on one trade, you can simply split your risk up, take a trade in both directions, and let which one is the right one win. Let that one pay you. That way you don't have to guess what price is going to do. If it falls, we'll get paid on Ethereum. If Bitcoin breaks out, we'll get paid a little bit on Bitcoin. It's just easy. So this big gray box is the price range. It's the trading range. But clearly this massive objective level right here is putting a little bit of downside pressure on Bitcoin. If Bitcoin starts to slowly trade above this and start to head higher, then the next place to look would be last week or the previous week's high. Hopefully that makes sense. We're just kind of letting Bitcoin figure out what it wants to do here. We're going to let it stay in price discovery. Looking at the VIX, it's backing off of yesterday's open, which is kind of a good sign at least. Dollar still trading under yesterday's low. That's a good sign. And the Japanese yen is still trading at the high of day. So that's not such a great sign. Let's see, is this trade working because of dollar strength or yen weakness? I mean, is it falling? I said that backwards. Is it because of dollar weakness or yen strength? And the only way to do that is to pull up currency futures. And then we can see right here that this is falling because of yen strength. So yen is actually up more than every currency except the Australian dollar. So the Aussie yen trade is probably very sideways today. It is very sideways. So this looks great for risk on. This chart looks way better for risk on than it does for risk off. If this chart looked better for risk off, I would be as bearish as you could be. There are a lot of things that I'm looking at that give me my more macro bias. It ain't just one or two things. It's a lot of different things, but still, it does a pretty good job of keeping us on the right side of the markets for the most part. Still making consistent withdrawals, so we're doing something right. When I actually looked at that MicroStrategy chart, I thought that was the yen, and that started to freak me out. I seen massive buy volume. I thought that was the yen ticker, but it wasn't. I was glad to see that was MicroStrategy volume. Yen volume looks okay. So yeah, I mean, this is a fresh month, and like, it's a fresh high. You have liquidated massive highs up here. So if it is going to roll over, it can literally any time now. All right, it's like the key structural area. So if you have upside continuation above 102.405, then you can have or be leaning more bullishly biased on risk assets. And Bitcoin is still very much a risk asset. If it rejects here and starts to smoke last month's low, well, then that does not look very risk on any longer. So you've got plenty of time to participate in this chart. It's not going to play out in one day, in 1 hour. So Bitcoin, I don't love that close on the 30-minute chart, but it is what it is. The sellers will hammer it there if they think it's going to roll over, as that is a higher bounce. You didn't really stop anybody out there except for people that literally shorted 930. $98.80 on the dollar. S&P stopped going lower, so that's kind of a good sign. VIX is lower, or it's off the high of day, which is a good sign. Ethereum still looks like a doji on the daily range. I mean, this doesn't look bearish at all to me. It might look bearish to other people, but to me, this looks like it's a very sideways, it's a trending candle. You took out yesterday's high. So you did put in an upside continuation of the trend today. You're off of that a little bit, but you're not like down here, which would look way worse. It's a very slow, rangy day, which is consistent with a bullish pullback. Very consistent with a bull flag, if you will. Bitcoin looks a little bit different, but there's stuff down there. There was really nothing there for Ethereum. But also Ethereum closing back above daily 21 exponential yesterday. And not only did it close above, it closed above in a good way. Like a nice expansionary phase above that, setting that level at lower than the midpoint. That's typically what you want to see at a resistance. It basically says the breakout is kind of legit. It doesn't always mean that, but any pullback into this area on Ethereum would be more of a buying op than a selling op, based on what you currently see going on right now with the weekly structure. But I get it. It's hard to buy weekly highs. I get it. I don't like doing it either. So far, we haven't fallen off yet. Everything still looks okay. Still looks decent. I'm not sure if that's right or not. It isn't. And it needs to be blue because the month and weekly open happened on the same day this time, which is odd. That doesn't happen every month, because you get a fresh weekly open on Sunday, but it's the Monday candle. But it happened this time. Very slow, sluggish today. Are there any gigantic... Oh, here's something we were watching today, guys. It was brought to my attention by someone in the Discord. Don't know what this thing is. That was the buying opportunity. Damn it. It's a nasty looking chart. Let's get rid of the session volume profile because it is a dirty indicator. It does muddle things up really strongly. But you can see it is a doo-doo asset. I mean, it's trading for less than 2 pennies. So clearly it has very little value associated with it. But what it has done, and Ethereum just got stopped. There you go. Boom, that smoked me on the Ethereum trade. Hopefully Bitcoin spikes and carries on higher for the rest of the day. We'll see. But anyways, this HANA USDT, it built in a several day support zone here. It's not like a bunch of days, but it's several. All right, it's more than a couple, more than a few. So we'll see if this area holds as support. If it does, then you could potentially look for longs. The area of support that we're watching and we're okay with holding longs at is 0.01318. That's 4-hour demand. So any pullback into this price would be a buying opportunity. Clearly that already happened and I missed it. But that would have been the buying opportunity. So if it pulls back into this area again, I would be buying it. If you start closing 30-minute, 15-minute, doesn't really matter what time frame chart you're looking at. If you start to trend lower under this price, then I don't want to hold it anymore. Because it could go lower. But it should go higher because this spike was over 8%. And it happened in a really quick amount of time. So this should have popped up on scalp scanners. All right. So if people are looking for this long-term support build to hold with this bullish spike, maybe demand is starting to flow into the asset. I saw one guy on Twitter has a 300% return expectation on this. Don't ask me why. But I wouldn't be looking for a 300% rally. I would simply just be looking for, if you get an opportunity to buy it, if you get a 10% move, take profits. Move your stop to break even. And then if it goes on to make insane gains, you will be positioned absolutely perfect for it. HANA USDT, 1N, no H, or well, 1H. It's not a name, it's just HANA USDT. 1318 is the price we're watching. Above it, we're okay with holding longs. Below it, we're not. That's a good looking 30-minute expansion. That's what I want to see. So now I got to set a take profit target on Bitcoin. It's got to go a lot further, unfortunately. Let's see. What would a 50%? Not quite. All right, 60% would do it. Let me see where that would put me. Well above the day high. Son of a bitch. Yeah, I don't like it, but I'm going to have to take a lot more than 2/3 of the position off. I will have to take like 3/4. If you're new, I always take profits. Always, always, always. Because if I'm going to take the risk, I want to pay myself for taking the risk. I don't want to hope for the best and hope I just get upside continuation for the rest of my life on one position. Oh, that's right at the day high still. Yeah, I guess I'm just under positioned on it because that would be a 2% move. Yeah, I'm under positioned. I should have a bigger position on. That's just my math was wrong. Because generally when I'm taking trades on Bitcoin, I'm looking for a 2% move. Since I filled right at this candle's close, a 2% rally would put me right here. Generally speaking, I want to have a big enough position on that when that occurs, I make at least $300. Because Bitcoin pretty much stays within 2% daily move every day. Occasionally you'll get big gigantic moves where you'll see it down 6 or up 6 or up 8. But on a normal, average, standard, low volatility day, 2% is a damn good target to look for on Bitcoin. And in a lot of cases, you won't even get a 2% move. So you would be better off looking for like a 1.5 or a 1.25% move. Would be a more probable target, profit target to look for on Bitcoin. So in that scenario, if I was positioned correctly, I could take profits right at yearly open, which could ultimately end up being resistance. As long as Ethereum keeps pushing on fresh day highs when it makes fresh day highs, which it hasn't yet. I had to make sure that was within 1900 hours. It is. So this is the day high on Ethereum. It's close enough. It looks like it'll achieve fresh daily highs. And we're seeing a spike, and VIX is back to negative on the day, which is good. It's negative from the open. It's not negative from yesterday's close. It's negative from the open. Oil's up today, which is odd. That's another thing that I'm watching. If oil starts to spike hard, that's going to look like people are buying oil for potential inflationary fears. So we need to keep our eyes on oil as well. So if oil does ultimately roll back over, that would be more of a risk on look. Oil's not synonymous with risk on, risk off, though. It could be bought up for other reasons. But if you see a big spike in oil with big upside continuation, generally speaking, that's inflationary fears. If the S&P is also rolling over, which is, you can get that same ratio. It's just a ratio to help you see when inflationary fears are being priced into the market by looking at either XLK versus XLE or SPY versus XLE or XLE versus SPY. It's just whichever one you put in front is going to be the direction you need to see. So like in this scenario, we're looking at XLE versus the SPY. If this is going down, then it's risk on. You can see how you had that big risk off move on the S&P a couple weeks ago. You've seen XLE versus the SPY spike. This is what an inflationary fear looks like. So if you get another one or a bigger one, like this stuff here, that's more of a risk off look. But we're not there yet, right? You're still making lower lows. You're not making higher highs yet. But when you start making higher highs, that's when you legitimately got risk off fears starting to be priced into the market. That was just a liquidation run, essentially. The fact that it fell back off and it fell back off hard was good. That's a good sign. That you want to be bullish S&P when this is happening. So right now, oil has got me on pause. I'm keeping my eyes on it. We did talk about buying oil on Tuesday. If you were here for the Tuesday stream, I did tell you that you could have bought it And I told you that you could have bought it at 58.36. That was the exact price. I literally said to watch and buy. And you can see that price is right there. It did ultimately come back. It did give us an opportunity to buy it. Now, this doesn't look good. If you're still holding that long, you might seriously want to think about taking profits and taking profits right now. What I would, if you're long this, I would definitely want to see it give me that expansion on up into 59.8. If it fails to do that, it's going to look like the sellers are hitting it right here. And if the sellers win right here, then obviously it would not be a buy in the future on another retest. The more you retest the support, the more likely that it's going to break eventually. But that was a buying op. And it did work out. So, but we'll see if this continues to spike. If it does, then we might need to be positioned more for the downside play on risk markets. Yeah, Bitcoin is struggling here. So what can we do? Oh, look at Fartcoin. Oh. Damn, that might have been a good short opportunity. On Pingu. $3.47. Fartcoin. It doesn't look bearish anymore. See, this is why I have a bullish bias on Bitcoin, to be honest with you. This thing is absolutely kicking ass and taking names. Look at this thing on the weekly. You've already smoked that big down week that we had on Bitcoin and everything else. It literally set the November low. You're trading well above that. You're trading above last week's high. I guess you could short last week's high on Fartcoin if it fails to trend above that point. We got 9 minutes left on this close. You know what? We could take this short. Since there's 9 minutes left on the close, if we liquidate today's high and then drop back under it, I'm like within 9 minutes, I might sell that. Just because I no longer have a short open. Because I closed Bitcoin or Pingu and Litecoin shorts. That's okay. I mean, this looks like downside continuation. So let's keep Fartcoin on watch here. We'll keep Bitcoin and Fartcoin on watch. Bitcoin looks like it's rejecting. So it gave us the move we wanted to see, but it didn't give us enough upside continuation. That could be because oil's trading up at the day high. That could be what's going on. We don't know for a fact that's what's going on, but that could have some ramifications. Oil's also trading above the daily 21 exponential. And like I said, the yen is still at day high. I would rather the yen be trading closer to day low than day high. So we might be able to put on a short here. Because this definitely doesn't look like a short. And anybody that shorted Fartcoin or earlier now doesn't like the short. I won't like the short either if Bitcoin starts to spike. I'm just saying if Bitcoin fails, I wouldn't mind having a short open. And this would if it closes here or higher, would be a breakout trappy sort of feel. That was December's high. It's no longer December's high. You have a new December high. What is going on, man? Internet is good. No dropped frames. Internet was cruising this morning right before I went live. I should have marked that 4-hour res. Let's get rid of November's high real quick. Well, we'll leave it there. I should have marked off that 4-hour res because that's the res right there. Boom. Got it. So I'd love to see a bounce here, get back up above the day high, and insta reject, close. We could sell it, and then if Bitcoin rolls over and this rolls over, it's not bearish. It's just it's like putting on a hedge for the Bitcoin long, since we're no longer in a hedge for the Bitcoin long. Thanks to the Ethereum spike. Thanks to that. That's last week's high, or the previous week's. Bit okay. It just, you know what I mean? It looks okay on a 4-hour chart. Looks good. Looks real good. It's just, now there's going to be a double bottom down here, and that puts a little bit of concern. But Trump could tweet or anything, right? That random market violence can happen at any time. And when that happens, it doesn't matter usually how you're positioned. You're going to eat a stop. Yeah. This was just 4-hour support. And it still is kind of holding on that Hannah trade. I don't know that this is going to continue to be bullish. It is a very ugly chart. You've got 4 days worth of potential support. So it's not like a long-term support zone. But looking at this chart long-term, it just feels like it's so close to being done that if the shorts just cover their positions, would probably cause a massive bullish spike. But you got one here that ultimately ended up getting hammered again. So I don't love it. It's just a trade. So when this candle closes, that will be your 4-hour close. Okay, now something's going on. There was a little bit of a drag on the internet. Stop yapping. There's no way there are actual participants scooping long end bonds at par other than Cayman's trading. Dude, there are trillions of dollars going into long-term bonds. Trillions. Big money doesn't... I'm talking about like companies and stuff. Like billions of dollars are traded in that market every single day. But as far as like YouTuber traders and Twitter traders, yeah, no, none of those people are scooping up 30-year bonds. But you got to put your money somewhere, right? Somewhere safe. A 4.75% annual return isn't bad. if you got $100 million just sitting around, you're not going to put that in Nvidia stock. You're going to put that in a safe asset, or at least something that generates a positive yield. When the yield curve is inverted, then obviously people will go run to the short term, but the yield curve is no longer inverted. So that literally means people are going in from short to long-term yields. This isn't the close that I wanted to see on Farcoin. Bitcoin looks okay still, but I would have liked to have seen it spike a little bit harder than that. But at least it's still got that look to it. It's only been going up since we bought it, so I mean, it is good. I mean, we literally bought it right there. It immediately went up. It just didn't go up far enough for us to take profits. Because that was my bad. My bad. I should have opened up a bigger position size. That way we could have got that take profit much lower. It is what it is. You could take profits now if you wanted to. I mean, it is up. You are up on the trade. That is generally when you want to take profits. Especially when day trading. Looking for a 2% move on Bitcoin is looking for like the outer edge of what it usually does. So that's kind of looking for too big of a profit target inside of a day range. That would be like looking for a 300% return in a month range on, say, an asset like Hannah. I swear, there is a guy on Twitter that literally has a take profit of 300%. And I could see no real reason of why. Just so you can see what that would look like. It's goofy. So if you bought it here, a 300% rally gives you... Yeah, and it's so random. It's like... That is such a random take profit. And his stop loss, of course, is like less than 1% wide. Of course it is. Okay, so there's that close on Farcoin. I don't love the short here now. With that look. To be honest with you. But I mean, it's within the range. Today's range. I'm going to dread it if it just falls off the map that I didn't short it. Entry 38.37, stop loss high of day. That would be a wide stop loss on something like this. That would be a 4.125% move. That would be a gigantic move. That would be like a spot position stop loss. Not a stop loss on a leveraged big position. Or a position with any leverage on it whatsoever. When I look at Bitcoin on the current leg of price on the 4 hour, I see shallow, high, deep, low, highs, deep lows, more over than not. Well, if you're looking at the 4 hour chart on Bitcoin and you have it like pulled in with any amount of time on the chart whatsoever, then clearly it looks like a bear flag. I mean, I get it. These three legs of price here are all measured moves. I think you broke down right through here and made a much like bigger move than the measured move. But I get it. It does look shallow, but you just got here yesterday. You know what I'm saying? Yesterday was the first day that you retested the yearly opening range since you lost it here on November the 18th. This daily candle looks absolutely perfect for a 3 bar play to the upside. It's your break above, your pullback here, and then your break above, right? The fact that you closed above the 21 exponential and the yearly open yesterday, all that looks okay. So, I mean, you've only got 2 days of trade that's happened here. And this definitely does not look like a very brutal sell side day, but the day is still young. It could finish as a nasty sell side day, like Monday. That would be brutal. That would be disgusting, and yeah, wouldn't be good. So I guess the best way to protect against that would be to look for a short on something like this. My problem doing that is I didn't like what it did right through here. I would have rather it closed up here and give me that trap feely or that trappy style look. The yen is still trading on highs and risk markets heading back towards the low. On the cash market chart, you are trading at the low of day on the S&P. You're trading above yesterday's open on the VIX. Oil's at the top of the daily range. Gold is even at the top of the daily range. The dollar's pulling back off the lows. It's just as far as entries go, I didn't love the entry on Fartcoin. And though Bitcoin doesn't look great because it's struggling. It's struggling because of this thing right here. So I couldn't short it down here. I am just basically trading what the market gave me. I definitely don't like buying the high of the week. I made that very abundantly clear before I even sent the order off. I hate buying the week high, especially on Thursday. Like the weekly range is already situated. You have the low and the high. More than likely, you are not going to make a fresh weekly low. You could make a fresh weekly high from up here, but it needs to hold support intraday. Otherwise, that is not going to happen. Oh, it does. I mean, it's not the best. It's not the best trade. Litecoin actually looks okay for a downside continuation move, but you liquidated that low already, so that's kind of there. Pingu has a low it hadn't liquidated yet. So maybe you could watch for shorts later on Pingu if it fails here. So right at about 11,962, if it fails there, one could arguably short and target this wick low. Take profits if you get that move, and then set your stop to break even. And then if you break down below this low, you could have a secondary target here. A little bit higher, obviously, just in case it doesn't make it to the target. Yeah, dollar's trading right back into daily support. That's not a great look. I would have liked to seen the dollar continue to push on day lows to give me a little bit more hope for Bitcoin's move. But, I mean, Farcoin may still give an opportunity later on. Maybe it isn't done sussing out direction here. Everything's kind of in price discovery still. Ethereum still looks okay for the breakout. We didn't buy Ethereum, we bought Bitcoin. Bitcoin still looks okay. We got long right here. I mean, it's not disgusting. It's taking its sweet time, that's for sure. But we try to find opportunities every time we're live. Sometimes the opportunity is before I go live. I would say most people got stopped out of Farcoin on that rally. Because if I didn't nail the previous December high, like if I didn't nail that short, I would be very concerned if I had a short position open right here with this look. I would be extremely concerned with that short. I would be like, this is going the wrong way. But Farcoin does that kind of stuff. Farcoin does that kind of stuff. Yesterday, we took the trade on Farcoin. I initially sent the order off here, but I only took a very partial fill. So we tried to buy it again, and we bought it on this wick low right here. I believe that was our long position. And then right there was our take profit. So it literally took forever. Like 2.5 hours we sat in that trade. And then finally, right near the end of the stream, it wicked up there into our take profit and we got out. Beautifully, I might add. Now, obviously, if you held that position, you did good. Because you did ultimately get a nice rally afterwards. After it traded sideways literally all freaking day. It wasn't until the new day opened right here that the rally took off. Bam. But ultimately, it still did the same thing. We were looking at this as a bullish retest. And then I got filled, but only on a very small position. So I had to add to that position on this push lower. And I was able to get out there. And then here it is now. So, I mean, right now, it still looks good. The structure still supports a bigger move to the upside. Obviously, I don't know that'll happen, but it still looks okay. But the sellers are hitting it. This yearly open, you're back under the yearly open. So retests back up into the yearly open will be met with sell side pressure. Of course, if you have a bearish bias, this is where you would be taking your short. If you think Bitcoin's going to close the year out red, then right here is the best entry you can take for that scenario to play out. Because as long as you're under this line, you are negative on the year. Not the best long setup. I've taken worse though. Back when I first started trading, I used to get high on fresh week breakouts on Sunday. How many of you been there? Buy a fresh weekly high on a Sunday. For it to not work, obviously. Or take a fresh short on a fresh low week breakdown. And then to get stopped out 20 minutes later. Yeah, those are terrible places to look for fresh trades. Absolute abysmal trading opportunities. You gotta, in bullish markets, you gotta buy dips. In bearish markets, you gotta sell rips. We were in a very bearish market, and I would argue that according to the weekly time frame, you still are in a very bearish market. You still are. You're still trading inside that last weekly decline. You're still trading inside of that candle's range. So you are still very weak. Very weak here. If you look at the monthly expansion, you're just right into like the 382 retracement. So still extremely weak. A stronger asset will get a deeper retracement. So we went over this yesterday. If you look at like all the times where Bitcoin was weak or strong, even, you can just look at it back when it started its run. So like if you had a bearish bias here and you miss the short entry, you getting ready to open a new month, so it's going to give you that opportunity to take a fresh short. The midpoint's all the way up here. So in a very weak market, you shouldn't get back up there. So if Bitcoin does ultimately fail here, right here is where Bitcoin is right now, today. You are retesting the 0.3282. So if it fails and slowly starts to migrate lower, it's going to look like December will be a downside continuation month. So here you opened a fresh December candle, traded up to the 382. That would have been a short side entry if you thought the market was going to stay weak. What is it going? Oh, it is. It's going by the day. Sorry. How do I change that to week? I don't guess I can change that to week. Anyway, you get what I'm saying. Now, that trade entry would have been phenomenal. And you did get downside continuation because you smoked that low and continued. You've got the same scenario going right here, right now on Bitcoin. So if Bitcoin is going to be weak, it should fail here. If it's above this, though, you have to say, well, it's a little bit stronger, so it might be looking for a higher retracement place. We don't know what it will do, but like I said, if you are looking for the short, this is an area that you could legitimately be looking to take it. I would probably rather see today take out yesterday's low and then short it on the pullback. So I would like to see, like if I was going to take that position, I would like to see it do something like this. And then tomorrow you could wait for this and then hit the sell when it trades back up into there like that. That isn't what we got going on right now. And right now it still looks okay. That's actually a really nice 15-minute close. It'd be nice to see it start to take off to the upside in any minute now. Ethereum looking okay. Farcoin's back above 4-hour resistance. So like I said, Farcoin, I don't like the way that 4-hour closed. to take the short on the close. It left this. But you could, in theory, still take a short on Fartcoin if it fails to go higher than that. I don't like shorting into bullish momentum like this. I would rather like shorting it after it failed for a long period of time and then slowly started to roll over. Because those, you don't really need a huge breakdown in order to hit take profits. When you have an asset currently strong with bullish momentum, when you're trying to sell into that, your stops are going to get hit so often just from random bullish spikes. You know what I mean? It's like, it makes it a little bit more difficult. Not really seeing a whole lot of volume build up here either. And where the point of control is on this daily range, I would rather be oh, I lied. There is quite a bit of bearish momentum or bearish volume built up here. That'll just give it fuel to the fire if it breaks out. As I would say, a majority of this stuff came from over in here. Because now your late New York session, you're trading right back up into this stuff. So if it continues to push, that's just going to give it fuel to help that rally. And that's not something I want to short into. So we smoked this high, that's good. This low stayed intact when this pushed down. That's also good. If we can smoke this high, that would be really good. My take profit is setting right now right at about the high of day. I am going to pull it down lower. I won't nail my $300, but that's because my position sizing was flawed. I could leave it where it is, but I just don't trust the year open right there. I don't know if it's going to get enough bullish momentum to break through all this with the S&P trading on day lows. Now it is starting to bounce a little bit, so that might help Bitcoin. But I definitely don't like it when it's trading down on day low. That doesn't help Bitcoin at all. But ETH is trading right at yesterday's high. That's kind of a good sign. Like I said, cash market S&P, the SPX, it's trading near the low of day. But still well above Wednesday's open. So that's good. You literally opened way up here, filled the gap, and found near-term support where it should have found near-term support above the monthly VWAP. So, I mean, it looks okay, but I still wouldn't love to buy that. Daily 21 exponential is holding for now. If these things start to fail, then maybe we can look for a hedge. We can hedge out the Bitcoin long, but right now it's not really failing. Like, you're well above where I said to look maybe for Pingu to fail. Well, it's not. That's a breakout. That's a legit breakout. It looks to me like support has been found here, and now you're starting to see that upside break. You do have the daily 21 on Pingu acting as resistance on the near term, but a breakout and close above is going to look good on Pingu. It could fail here. You do have a daily res level to watch. There's a lot of resistance right here on Pingu. Same with Bitcoin. You got the yearly open and other stuff, right? Well, we'll see who wins the battle. Right now, the buyers look like they're trying to win. At least they're trying. Trying is better than just waking up and looking at the charts every day, seeing a nasty drop every single day. Unless you're short, that's always great. But I peeled my shorts off by accident, and Bitcoin hasn't gotten quite high enough or shown me enough rejection for me to put that short back on. Now, I do own IBIT puts. I own IBIT puts in my main account. So I'm going to keep those puts all year next year too, just in case. I'm going to let those expire worthless. If Bitcoin continues to trend back up towards all-time highs, I will let those put expire worthless. Because it was a hedge, not a trade, not a full-on try to generate revenue kind of thing. It was try to keep my Bitcoin holdings from depreciating to the point to where I lose half of my money. No, thank you. I don't want to lose half of my money in my Bitcoin cold storage wallet. Nobody does. The only way to prevent that is to buy insurance. If Bitcoin fails here for a couple more days, I will more than likely throw that short back on the futures platform. If Bitcoin breaks out of here today or tomorrow and starts to head higher, then I can't start looking for shorts until up to here. Because that will be the midpoint of last month's range. That would be the next area where you would expect resistance to start to show up. So like where we closed yesterday, if Bitcoin just barely gets above that and then fails again and starts to head lower back to this, I'm going to be throwing on some shorts probably. I definitely need that hedge on the futures account as well, because I'm about growing the all accounts. I like to grow. I'm a very aggressive trader. I am aggressive in looking for intraday and intra-week opportunities. Very aggressively. This still looks okay to me. Like you're not seeing that heavy risk off look here. We could short right now, right here. Right? We could risk 0.5%. We already have a short on for yen strength. But if it fails here, not a bad place to look. Right? 0.5% is nothing on account the entire account's value. If you don't trust it, put on less. Do like 1/3%. Because if it does happen and you do see that yen spike and the markets start to unwind, this is going down, like hard down. Like you'll make more money on 1/3 of a position on this than you can even fathom. When this thing starts to head lower, it's going to go low. So like you can kind of see how like this is like that line in the sand, 88-ish. Maybe even higher, maybe 89 is like that hard stop. If it breaks down below that, you would see a nasty repricement lower, because it has spent all of this time in accumulation. So if it were to get back down here, that's the same. It's the 140 area on the USD JPY. It's literally this area on this chart. Same area. You lose this, it's puking. That's a massive return. Why is it? It won't let me like. Yeah, it just won't let me do it. That's stupid. What is the problem here? Here, let me just do this. So just back down to there is 1,400 pips, guys. Like, that's a shitload of money. And then if you lose that area, if the yen carry trade starts to unwind and it starts to puke down from there, I mean, you're looking at 2,800, 3,000 pips, and then in a dramatic, like massive bear market, this thing's given back a lot of that carry trade. That's huge. A 29% return on 50x leverage on almost three contracts, 3 lots. That's going to be a ton of dough. You can basically do the math real quick. It's up $2,000 and it's only moved how many points? Yeah, it's only moved 124 pips and it's up $2,000. You can do the math on that and see just what that would end up being. I'm not saying this is going to happen. This is way outside of the realm of possibility, or even like this would take, in the normal circumstance, 8 years probably to get down there. I'm just saying, like, if something, everybody's expecting the world to end essentially. Like most of your Uber bears on the internet right now, they're looking for a GFC style collapse. I'm not, but they are. But it's okay for you to position for that. You'll just eat a stop if it doesn't happen, right? But if it does happen, if you do get a GFC style collapse, this trade is going to pay out $500,000, $1 million. I'm just doing random guesses. You could do the math. There you go, right there. 2.5 lots, $2,000 at 124 pips. Now, factor that in. Big money, huge money. And I'm not trying to just catch that on one. Obviously, I would like to catch it on this one. I'm not expecting this to have a nasty collapse. This one, I mean, how much of this is going to get given back? How many people are going to rotate capital flows outside of the Swiss franc? Like, say you are a big money man and you've been throwing huge sums of capital into the Swiss franc because it's a great asset to hold great sums of capital in. Well, now you see a crack in the armor in the Swissy, and you're starting to see the yen firm up. You're going to have you're going to flee. You're going to take your money, at least half of it, and rotate it from the Swiss to the yen. Boom. And that's going to give this thing nasty pullback. Or on Aussie yen. There's just so many different ways you can play it. Just make sure you're taking wide stops, small positions, because when that kind of volatility happens, you're going to see ginormous moves. you're going to see Forex pairs be down like 1, 2, 3% per day. Insane stuff. These things barely move. They barely move. But back when it was super volatile, there was one day when Aussie Swiss was down 4% in one day. Right here. Down 4%. You would see that kind of volatility show up in Forex. It's not there yet. You are right now liquidating a massive swing high, though. But it isn't there yet. That's what I mean. There's plenty of time. This isn't going to unwind overnight. Wait on the vote. The vote, I don't know when the vote is scheduled to be. When they do that vote, but they're already talking about an interest rate hike on the JPY, or the BOJ is talking about a 5 or like a 25 basis point rate hike. They might do 50. So that in itself is going to cause the USD JPY yield, that carry trade is going to tighten up even further. It's already real tight down here on the long end. It's this near term edge right here. So there's still a 3.25% spread, but we're cutting interest rates in December. They're hiking. So even if we only cut 25 basis points, they hike 25 points. That's going to narrow that spread by half basis point. The more narrow this spread gets, the more chances of unwind happening. And there's a lot of people that are bearish on Nvidia right now. I don't buy it. Like, I did buy it, but I don't think it's going to happen. Like, Barry's trade on Nvidia might play out. It's a good trade. It's way out there in time, so it gives it plenty of time to have a pretty nasty drop. But he has to be right for that to happen. Nvidia is up almost 2% today alone. All right, Nvidia is under its daily 21, but still above its weekly 21. People might start cutting their losses, or at least taking profits on it. If you were to get that daily 21, weekly 21 cross, maybe that would put a little bit more selling pressure on Nvidia, but you're not seeing real heavy selling pressure in this yet. It hasn't rallied back up to all-time highs like the S&P has. You've got resistance here, but it's not like huge resistance. You've already taken out last week's high, and then you didn't get downside continuation. So at best, I wouldn't be a heavy seller in Nvidia this week. You know what I mean? It just ain't there. Not yet. But it could be there in the future. Time will tell. We put that trade on already. If you're listening to my voice and you're wondering what trade I'm talking about, the Michael Berry trade, the guy that did the big short, he is literally short Nvidia. We looked at his filings, so we know exactly where. He's out here, Jan 15, 2027, 407 days out. And he's out here on the 50. That's where his trade is. You can see the open interest right there. A bunch of open interest here. Thousands of contracts. That's his trade. Now, this trade will pay out if Nvidia drops significantly. It doesn't need to go into the money to pay out. A significant increase in volatility on the VIX, a significant increase in IV on Nvidia, a big down move will cause premium to flow into this. So he will be able to sell it as long as it doesn't lose a lot of intrinsic value. That's the reason he went out there real far in time. Give it plenty of theta, so that way it doesn't start rolling over based on intrinsic value. So then you just need a mild drop in prices for this thing to start moving up the chain, if you will. I mean, it's not a bad trade. 60 cents, it's a YOLO position, damn near it. But we can go out in time, like we can go up in time and say, in theory, what if this happened? What if this goes in the money? What if the $50 strike goes in the money in, say, 200 days? Well, we could go right here. You can see what in the money is. At 200 days, in the money's $22. So, I mean, that would be a hell of a trade. But of course, Nvidia has to drop down to $50. And that would be a 70-some% drop. So he's not shooting for a 75% collapse on Nvidia. That's not what he's shooting for. He's just shooting for a volatile period. Maybe down in here. If prices could get in this area, the premium's going to shoot up on that put. So just even 200 days out right now, the $50 strike, well, it's going to go way down in value. He'll make money on it if it rolls over. If he doesn't, he's going to lose $60 per contract, and he's spent millions of dollars on that position. But he's got plenty of time. He's got a whole year for it to start dropping. What do you mean modified? Oh, it's because I put it on. So Bitcoin's struggling. I don't like this. Very choppy day, man. You're trading inside. You've not made a fresh day high or a fresh day low. Very choppy. Are there any other questions on anything in particular? You got an asset you want me to take a look at? Anything. IBIT sitting on support, looking good for up. No, I mean, it would be about, like, if you're looking for an up move this week, you just understand that it's going to close tomorrow. So how much further up could it go by tomorrow's close? So, I mean, I wouldn't be, if I was, I don't think I would be buying IBIT options if I was just looking for a trade like right now. Obviously, if Bitcoin continues to go up, if the market doesn't ever get any more bearish than it is, then you could buy here. But you need to buy it way out in time, not like just a week or two out. I mean, it could go up. It traded down into support. This right here is just a dead cat bounce for now. That's what it is. It's just a dead cat bounce. So it's basically doing the same thing Bitcoin is doing. Bitcoin is trading as an inside day. IBIT is trading as an inside day. IBIT actually got down near yesterday's low. It actually went lower than the spot price of Bitcoin. Even Pingu rejected. So I might go ahead, since we're real close to resistance, I might just go ahead and throw a near-term stop on this or put a trade on this. I think it's close enough to resistance to do that, just to hedge out that Bitcoin position, because Bitcoin's taking its sweet time. Fartcoin could get really volatile and spike you out. So, I mean, this isn't a trade that I love. I don't like the structure on Fartcoin for a short. Like, the market structure doesn't look good to me. Fartcoin is up 14% from where it was yesterday. Fartcoin is currently up 11% today, on a day that Bitcoin is down almost 1%. I don't love those kind of shorts, because obviously sellers are getting their asses handed to them in this thing. I would much rather a certain scenario play out before I took the trade. So you do have a 3-drive topping formation here. You already have it. 1 drive, 2 drive, 3 drive. They're insignificant highs, and they're split up in a daily fashion. See this? 1 drive, 2 drive, 3 drive. That's one reason I could get bearish on Fartcoin. That is a topping formation usually, but you're doing that with a shitload of bullish momentum. The only way I like this 3-drive topping formation is if today it fails. If you close today above this high, then I no longer like that. I would not be trying to force the issue at hand. You know what I mean? But if resistance holds, if you close under resistance here, right here is 4-hour res. The last closing candle. If you close under that, then maybe you could look for the short. I definitely wouldn't be trying to short it if you're trading above that purple line. If you're above that, I would not be trying to short it. I would throw on a short if it liquidated and instantly rejected, like in the same 15-minute period. If you throw a wick up there and then close back under, then I could sell it at that purple line and throw a stop at the new high and see what happens. But for that to play out, this 3-drive topping formation, I would love to see at least some points of control proving that the sellers are there. I would rather this point of control be up here. I would rather this point of control be up here. Does that make sense? They're not up there. It's kind of like iffy. You're just going, if you take the short here, you're going to have to manage risk. Probably pretty actively all day. You're currently trading above the open. You're currently structured bullish here. So it's not a perfect setup, to say the least. This drop right here, Bitcoin could still rally going into like late session, but I think you would need to see the S&P rally or the dollar take a beating. The S&P 500 has been kind of trading, well, not really. Dollar's been trending lower for the last 4 days. S&P 500 the last 4 days have been trending higher. Today's the first day that you're kind of seeing an extensive pullback, because you're like an outside day on the risk markets today just means you're trading as a bearish engulfing. You took out yesterday's high and you took out yesterday's low. But yesterday was such a nothing move that it doesn't really matter. If Bitcoin holds support here at the bottom of the value area, then it could end up rallying. If you start closing candles back down in this direction, you're probably going to eat a stop on Bitcoin. That's about all I can say about it in reality. So the best, instead of taking the short on Bitcoin right here, right now, maybe you could get a little bit more bang for your buck in something like this, but it definitely doesn't look like it's a short. You got the 3 drive topping formation, and that's about it. Today is very bullish, and it has been super bullish. It wasn't as bullish as Pingu was on that crazy ass Tuesday, because Pingu moved up 30 something % in one day, but it was very bullish still. It smoked a lot of stuff. It smoked last month's high. That's kind of what you're dealing with right here. But I mean, it looks like it could fall back down to 32 cents. But I need to see that failure. And these volume points of control do not look like it. Like that's happening. And you're also structured bullish on deltas. Farcoin looks bullish to me here. I wouldn't buy it here. Like, I'm not going to buy Farcoin right here looking for a big breakout, but I could have bought Farcoin at the same time I pulled the trigger for the Bitcoin trade with this delta like that, or even earlier. Notice how the delta just couldn't like really start trending lower. Price did the same thing. Like, price could not break down here. So you had an hour there to make a decision if you wanted to buy it or not. So that would have been a decent trade to put on, not a long up here. If Bitcoin fails, I think Farcoin will too. I just wish these structure looked a little bit different. But we'll see what happens. Let me answer the rest of these questions and wrap this up. USAR having a day. And oil is currently breaking out to the upside too. That doesn't help Bitcoin. Yes, it is. Damn, dude, this thing is super volatile. Yep, so it looked like buying it down there was a good call. I said I don't think I would, but if you did, good job. It's up nicely today. It's super volatile. Be ready for that. Volatility could be your friend, it could hurt you. Leverage and volatility is a double-edged sword. Sometimes. We do pretty good with it, though. We're pretty good at catching the right times. Can you take a look at Meta? Yeah, I like Meta. I liked it better when it pulled back into the lows. Clearly. It's having a day today, too. So Meta is currently trying to break out. It needs to hold above last month's high. So that's where I would want to see support come into play, but chances are you won't. So at the very minimum, I could buy like December open retests if it holds that price as support. It could hold here. You don't need to see a gap fill before buying it. You could wait on gap fill to buy it. I don't know. It had a nice pullback. Excuse me, coffee burps. Meta is very volatile. I figure Meta will probably split if it starts trading above $1,000. So buying it on pullbacks might be a good idea. It doesn't look like it's ever split before. So if the markets get bullish, like Q1, Q2 2026, and if Meta is able to put in fresh all-time highs and continue, it might be a good idea to buy it around $600 if you're looking for that. If you think, honestly, I think $1,000 Meta is easy. I don't know if they'll split it, but it seems like all these big tech companies start looking to split at around $1,200-$1,300 per share. If you got that move from here, you would double your money. And I definitely would not take profits if Meta splits, because that's just a cheap or a free way for you to own a lot more shares. Now, clearly, when the split happens, your shares will be you're going to still be up the same amount. You're just going to own a lot more shares. So you're going to get paid a lot more on big, gigantic, bullish rallies. It's always a good thing to own a company when their stock is growing and they're splitting and growing and splitting and growing. But, I mean, how much more growth can this thing have? Well, a lot. Meta's a big player in the AI space. Or a big player in the data cell space, too. I mean, they make money. That makes them a growth company. So I like buying Meta on dips. I like buying it on dips. I could be a buyer as low as 585 on this chart. My main, I would rather be a buyer on Meta the same way. I like to accumulate these companies on oversold readings. That's when I like to buy them. Once they get into oversold territory, that's when I like to put the risk on. I know that it can go much lower, even just because it's in oversold. That doesn't, that's just where I like to add. I always do and I always will. So Meta is not quite a buy for me yet. But I'm not expecting a big bear market next year like everybody else is. Maybe something happens to cause it, but with the current economy being K-shaped and everything, where inflation is, where jobs is, there is no indication that we should be looking for a bear market. Here, and let me show you this one last chart real quick. I think it's in here. Yeah. Okay, so I just noticed CAPE ratio is back up to the 30s. It's insane. It seems way overvalued up here, but it keeps coming right back. So this is ISM PMIs. Now, it hasn't really done anything in a long time, right? But if it does start to rally, that's going to put buying pressure under Bitcoin. It's not dead. You know what I mean? It's not pushing on the lows. You would need that to happen before, for recessionary type bear market. You would need this pushing lower. Here's your business. This is total asset. Okay, this is the Fed's balance sheet. I mean, is this the reason why Bitcoin's pulling back? I don't know, but I know it ain't helping Bitcoin. When this thing bottoms out and starts to head back up, that's going to help Bitcoin, and I like where it is for that. Now, obviously, I don't know that the Fed is going to start adding or quantitative easing again, because they are in a tightening cycle right now. But when that tightening cycle stops and then the easing begins, Bitcoin's probably going to rally along with other risk markets. So yes, this is pulling back and the stock market is still trading at highs. I get it. It's top heavy. I don't want to buy a $7,000 S&P 500 for a new investment. I would rather buy oversold weekly charts, but we're just not getting that yet. So we got time, but this is getting closer and closer to bottoming. And then here's your business cycle, kind of, you know what I mean? The business condition is looking good. So this is actually spiking up. If you overlay this chart with the PMIs, this kind of looks more like we're probably getting ready to see PMIs start to rally. All good stuff, man. Nothing majorly bad here. Now, with that being said, your 10-year, 2-year it's back to not inverted. So this is typically when people start to look for the recession. When you get the inversion signal, it's once you recover. That's when the recessions happen. That's typically when people are looking for the recession. I don't have the recessionary indicator up real quick. I guess I could go find it. Recession, no. All right, let's look for it. But you've seen the chart a million times. Usually when it starts to recover like this, that's when people start to fear recessions. But no other indicator, none, is saying that we're looking for recessions. Not yet. You're still seeing positive growth in GDP. There's still there's not much stuff out there saying that we should be looking for a top. The only thing that's saying it is Bitcoin. And then this is getting closer and closer to looking more recessionary. It's once you start to recover. So the recovery has started. So anytime now. Like the last time this recessionary indicator fired, it was fired like in this area. That's it. Like that's what everybody's looking at. And I, like most of the people that I listen to on that have podcasts or whatnot, I don't think I've heard one neutral guy. Now, I'm not talking about bearish only or bullish only people. I like to listen to neutral people that are like me, that don't mind throwing on bearish positions in a bearish market, right? And when the markets are bullish, you're bullish. Most of the people that I'm listening to right now are still bullish. They're not bearish. I'm talking about regular markets. K-shaped economy is still, it's bullish. It's not bearish. It's not great. It feels top heavy. There are, outliers and whatnot, but still up. I think Bitcoin got overblown in the leverage, and that helped it sell off, but it wasn't a super fear-based. You literally had like 3 or 4 days of like fear-based selling. Most of it was systematic. Most of it's measured moves. I put that up on Twitter that this sell-off was mostly measured. It was a measured event. It was a very easy sell-off to participate in. Very easy. And usually in chaotic moments, you don't have measured sell-offs like this. I literally copied this line. So this line is this line and that line. So you can see how the sell-offs were very measured. Very easy to be looking for the downside moves. I don't know that we've bottomed, but I would say the near-term low is probably in. If you see a sudden spike in volatility on the VIX, you see a sudden spike in the VVIX, which is the volatility of the VIX, then you can start to say, okay, well, maybe the low isn't in. You don't want to buy lows when the VIX is spiking. But if the VIX stays low, and by low, I mean under 20, under 15 is typical, but it's still slightly elevated where it is. But if the VIX stays under, like, let's say 18, I think dips will be bought. If the VIX is up at 25 and you're pulling back into support, then no, you don't buy support. But as long as the VIX is neutral or under 18, I think every single dip you get into support, you can be a buyer. Maybe not this week because it's so late in the week, but next week, early next week, early the week after that, same thing. As long as it's not a massive spike on the VIX, pullbacks are probably buyable opportunities. And that's how we'll finish it. Obviously, I will eat a stop if Bitcoin makes a fresh day low. Right here is the open. We bought the low of day on Bitcoin today. Our entry is literally pretty much that low wick. It's the close of this 30-minute candle is where my long is. So if we make fresh day lows, that trade will be stopped out. If that happens, hopefully I'm positioned in Fartcoin by that time, but I'm not seeing anything here that tells me, yeah, I definitely want to be short Fartcoin. But if it continues to struggle, maybe I'll throw that position on like later. We'll see how it plays out. But I mean, I wouldn't be looking to buy Bitcoin on these kind of dips. But you could, in theory. Just make sure you have a stop. It looks like you're continuing lower now, because this was the low. You took it out, and this candle right here is trying to make another lower low. So it does look like Bitcoin stalled out and is now looking to make a fresh day low. This is the downside target if you do start to look lower. Maybe if you liquidate that and reject lower prices, then you could maybe buy it for a day trade scalp or something. I don't know. But our opportunity didn't work out, or it hasn't yet. Usually we know really quickly if we're right or wrong. Generally, when we're right, we get into a position, it works out for us pretty quickly. That just didn't end up happening today. Should have, but didn't. So that's that. Unfortunately, I will keep the position open. I'm not going to close it. I've made my money in 2 other trades, so close enough. If I closed Bitcoin out right now, I would be up. I would have made my $300 on the day. So I don't care what happens to this trade. And I won't be adding to it, though. That's for sure. You guys have a fantastic... Oh, wait. Cat is rocking and rolling? I didn't look at Cat. Is it a buy yet? Holy cow. It didn't pull back very low. Very far at all. Yeah, it's making fresh all-time highs. There's nothing I can do on this. I will buy it, but it needs a significant pullback. Yeah, fresh all-time highs. That's just ungodly. I love rallies like that. This thing's probably going to chop sideways for a couple months. I wouldn't be trying to buy a fresh breakout up here. I mean, this thing needs a pullback. Or at least some sideways price action for a few months. You're trading well above last month's high. I would watch it later on, maybe. Let it pull back, let it stay range bound for several months, then we'll look to be a buyer at support. I can't do anything with it right here. I'm definitely not trying to short this. That's a fresh all-time high breakout. Very strong. Cat is strong with the force. Nothing really to do here. Real economy assets were missed trade of the year for me. Can you check BTBT and ANET? I like, okay, yeah, BTBT. That is an Ethereum company. They're basically doing the same thing the Bitcoin treasury companies are doing, but they're doing it with Ethereum instead. So obviously they got hit pretty hard when Ethereum rolled over in August. Are the lows in? Maybe. It's the bottom of a very long-term range. But, I mean, you need Ethereum to rally before this will. Depending on this company, I mean, they probably don't make money. Nobody owns this. Your hedge funds are not buying this. Investment banks are not buying this. The only people that are buying this are retail traders. That's about it. It's a $2 stock. Is it something that you can buy a few shares of and just hold on to in case of a big bullish rally? Absolutely. But just make sure if it goes to zero, you don't lose your entire portfolio. Don't put all your eggs in this basket. But as long as it's trading above last month's low, that's kind of a good enough reason to look for a few shares of it, maybe. I don't trust these treasury companies, and there's a real good reason why. Because Bitcoin and Ethereum are super volatile, and these companies are just throwing them on their books, hoping that the crypto bros come in and save them. I don't like owning assets that do not grow. This is an asset that does not grow. Will it grow? Yeah. If Ethereum grows, this might grow too. But this thing is just a little bit away from being bankrupt. And that's a little concerning for me. But there's the pullback to the bottom of the range. So in theory, you would want to see this area hold. $1.96. If you're trading under $1.96, you might want to get out. Wait for another monthly low to be put in and then look to be a buyer at that monthly low. If Ethereum has put in the low, then it should rally. We don't know if the lows are in. We think they could be for at least till the end of the year. I do anyway. I think if there is going to be a big bear market, if Bitcoin's going to come off 80% like it does every 4-year cycle, I think you're going to get an opportunity to short it in 2026. And in fact, I think that would be the best opportunity. And that's kind of what we're waiting on. So there's still 21 people in here. Maybe there's 1 or 2 people that don't know who I am. But I made a lot of money in the last Bitcoin bear market. And I literally said people should look for shorts right in here in 2022 because of what price was doing. And everybody that listened to me, they caught the last leg lower in that bear market. Now, I don't expect it to play out exactly like this, right? I don't expect it to play out exactly like this, but it will play out similar to that if people are still concerned in 2026 about a bear market. If they're not concerned about a bear market in 2026, then Bitcoin will rally. But right now, we're concerned with what it does in this range for right now. So a lot of people are going to be watching this trend line to get bullish after it breaks above the trend line. I mean, there's a million different ways you can look at it. I think as long as your VIX is low, you can be a buyer of dips. If you see the VIX start to spike, S&Ps roll over, and you're seeing big down days every day, then obviously you're going to make a fresh low on Bitcoin. But you're so close to a fresh yearly open, you might as well wait for that yearly open and then see what Bitcoin does then. But right now it's bearish on the year. So you kind of have to have a little bit of a downside bias, or at least some kind of protections in place to catch any free falls. It's not free falling now, but it could. And that's what puts are designed for. And that's what futures are designed for. To protect your long holdings. You guys have a fantastic... Annette. I only read the BTBT. 196 would be the price to watch on BTBT. And finally, Annette. Annette actually looks better. It had a nice pullback that looks like a blow off top. It absolutely looks like a blow off top. But obviously it's trading like Bitcoin is, as it hasn't taken out this week's high yet. I think that's where resistance is for this. So we'll have to wait and see what it does when it gets up there. But if you do pull back into these lows down in here, you would want to see support build. If support builds, you can buy it. If it trades up here, rejects, and then heads lower, then that's where my profit taking on the short would be. I would be like selling that, looking to take profits on that move. But the long would have been last week. I mean, it did give you an opportunity. It opened down there. So just take that knowledge going into, the future. If you're looking to buy these things, look to buy close to lows. You did not get a retest of that price last week. You know what I mean? You opened with a gap up, but this would have been low enough to take the opportunity. Don't necessarily want to do it while it's in the resistance, but you're getting ready to open a new week next week, and where it is then will make a lot of other people will be looking to buy going forward. So maybe not buy it today or tomorrow. Maybe wait till next week, see what it does. See if it pulls back into here. All you got to do is watch Bitcoin. These things are trading exactly like Bitcoin. So whatever Bitcoin does, these will do, most likely. Same goes for MicroStrategy. Mara and other miners, I don't know what they're doing, but they're probably looking rough. They are absolutely terrible. Got all the way down to $10. That would have been a scooping up some more opportunity. That's a long-term support zone. Does Riot look that bad too? Oh my goodness. I mean, to be fair, it slightly bounced. No, Riot doesn't look as bad as Mora. The Riot didn't pull back to 7. Looks nasty on the near term, but it did have more of a bounce. Yeah, they're going to do whatever Bitcoin does. So if the lows are in on Bitcoin for the near term, then the lows are probably in on this as well. But there are better areas to look to buy. The lows, for instance. Because if it's going to bounce, then it's going to trade back to the low and bounce. Nobody knows if that will happen, but that's when you're supposed to buy. Like when I bought my, not Microsoft, but MicroStrategy. When I bought it, nobody thought that was a good area to buy. You know what I mean? Nobody's thinking that those are the areas to be a buyer. Getting rid of all these gaps because that just dirties up the chart. I'm still in the red on this position. Still in the red. I had to add to it on that week. So the shares position's not bad. The call trade that I put on is bad. It's got to get up to 125 to get paid out. Or 225, sorry. But Bitcoin just needs like 2 or 3 really good days, and MicroStrategy will be at 225. and then I'll close the trade. When it hits 225, I'll get out of it. But I still own shares. I bought shares. This hit oversold. This gave a buy signal. On the close of this week, that's when you should have been buying. You could have bought lower this week. That's when you buy. You're oversold. Can it go lower? Absolutely. But I'll add at 90. That'll bring my cost basis down to 150. So I'll keep adding. It'll bounce. It might take several weeks, but it will bounce. Maybe. I'm confident enough to hold it. I'm confident enough to buy the oversold. I'm confident enough to hold it. And the shares that I bought, I'm not looking to sell them anytime soon. I'll sell these shares when MicroStrategy splits again. Psych, I'll hold them then too. I'll just own more and more and more until quantum computing becomes a thing and a workable application. Then I'll sell. I'll probably sell all my Bitcoin too. You guys have a fantastic rest of your day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.